A wonderful good morning to everybody out there. This is the Thursday edition, Thursday, the 19th of August of That Crypto Show. And my name is Dirk Hartig. I'm the head of trading education here at primexpd.com. And I have also the pleasure of being your host today to talk about our favorite topic, cryptocurrencies, Bitcoin, and trading. Isn't it great? Before we start, as always, the risk disclaimer. This webinar is brought to you and provided by the primexbt.com research team. And our intention is to provide you with information and education so you can make your own better informed trading decisions. So everything I'm telling you here in this webinar is not financial advice. Please, guys, you always have to do your own due diligence and make your own trading decisions. I can just inspire you if you want to say so. Yeah, today we want to look a little bit at, I call it, a roadmap of what is up for Bitcoin really in the upcoming weeks, in the upcoming months. And it seems a little bit like, since we topped out slightly over 48,000 the other day, that was on Saturday last week, if I'm not mistaken, that the market participants are losing a little bit of faith. And we want to zoom out today a little bit to get a perspective of what this correction really means in the longer term picture. As always, before we start our daily trading activity, I like to have a look at the Fear and Greed Index, which is 70 today for Bitcoin. Fear and greed meaning, is the market perceiving the current cryptocurrency prices, the current Bitcoin prices as still worth buying, or is the market afraid that it's going to drop? So we saw, I think we dipped a couple of days ago already in the zone of extreme greed. Here now we've dipped it lower again to 70. So this is green, means greed. So we would normally prefer, or I would normally prefer to do long positions in this kind of scenario. But of course, this Fear and Greed Index is just one thing to take into consideration when looking at Bitcoin and looking at trading in general. So I went through a couple of news today as well, and I saw that the tone of most news agencies out there is getting again a little bit more conservative. Remember, a couple of days ago, most of the headlines you read were like, okay, we are going to see new all-time highs, it's going to come, everybody jump on board. Now that the market has come back a little bit, seems like people out there, reporters, are getting a bit more cautious again, which I consider to be good and to be also healthy. Because, I mean, what we saw the last days is that we dipped below this important 200 days moving average. We yesterday tried to recapture it, but failed so. And by the way, remember, yesterday I said it might be a good trade to short the market at 45,500. So this is a trade that played out extremely well. I gave you a little bit of insight there in my personal game plan for this day. So that was a very good trade. So we can later discuss then what we should do today, if we at all should position ourselves, because sometimes it's also good to just, stand by the sidelines and see how things play out first. So Fear and Greed with 70, we already had a look at that. So a couple of news I found out there, which I thought were very interesting. So Bitcoin will remind investors who the king is, says popular crypto trader. The popular crypto trader in this case goes by the handle Pentoshi, at Pentosh1 on Twitter if you want to follow him. And he's been pretty good in the past tense with giving insights on where to buy and where to sell your Bitcoin positions. And coincidentally, he is actually pretty much the same opinion as I am. So he says, like, okay, this is healthy what we see at the moment. The market coming back a bit after such a large rising markets. I mean, we went up over 50%. So of course, a phase of consolidation after this is just healthy. And basically, he says, yeah, okay, I wouldn't be surprised if the market goes to 40 or 42,000 US dollars before it goes up again. This would be a total normal correction. And he's ready to buy in that zone. And this is basically exactly, and that's why you see those three lines in here, which I drew in the very long before this already. As you can see, they are there for a reason, because on the way down, this acts as an area of support now. And yeah, I personally, for me, that would be a zone also to look again for possible long entries. That is for longer term positions, of course. When I say longer term positions, I really mean like coins that I want to hold on to for a couple of weeks, a couple of months, possibly even a couple of years, depending how the market plays. So in between there's a little bit of nowhere land, and it's interesting that he also says, like, what we probably will see is that Ethereum and Bitcoin both again are going to be the king, and that altcoin, the so-called altcoin season, all those little new coins, maybe scam coins, who knows out there, that are hyping like crazy at the moment, and they are going to stand at the sidelines again, and Bitcoin and Ethereum will lead the way. So basically what you see in pretty much every bull run out there. So yeah, this was him. What else did we have? I bet we just talked about. Bitcoin whales appear to be hungry again, according to on-chain data by crypto analytics firm. So this digs also into what I covered last week. I think we talked about this, that the on-chain metrics of Bitcoin, on-chain metrics means there are companies out there. You can do this as well, by the way, if you have access to the tools you need for that analyze really the blockchain transactions, meaning like they, for example, look how many of those coins that are bought, how fast are they sold again. And what they found out, so this firm is CryptoQuant, and the other company we talked about last week is called Glassnode, who's also more popular out there because they have pretty good tools to use if you want to really, let's say, go do the deep dive into this on-chain metrics, on-chain data. And we will for sure cover this in a later broadcast as well, because there's so much stuff you can deduct from this for your own, for defining your trading strategy or to add on top of your trading strategy. Well, anyway, so what they said is what they see at the moment is that there are large stablecoin inflows. Stablecoin is something like Tether, US dollar coin, for example. So coins that are pegged to fiat currencies, in this case, the US dollar. So one coin is always worth around about $1, and traders out there like to sometimes when they sell, for example, Bitcoin, exchange it for those stable coins, because it's easier for them to move those around between exchanges and then rebuy at a later stage, for example, Ethereum or Bitcoin. And what they noted now is that they saw around about 222 million US dollars worth of stable coins that were deposited at cryptocurrency exchanges, and to probably buy Bitcoin, now that we have dropped from 48,000 to around about 45,000, 44,000 yesterday. And this is always a good sign, because this is so-called smart money. Coffee. Smart money meaning the institutional investors out there, or people that got into Bitcoin very early and have hundreds or thousands or tens of thousands of coins, which are in general being referred to, for example, as either whales or institutional investors. JP Morgan setting up a Bitcoin fund for the client, for example, is a typical example of institutional investors. And when you see those institutions starting to buy, this is generally a good sign, because they have access to much more knowledge, much more data than the average retail investor has. So the normal average everyday retail investor, of course, cannot spend millions and millions of dollars every year to run a research department that probably employs some of the smartest people on this world. So they spend a lot of money on research to get a good view, to get a solid opinion about what is going on there, that they can then act in hopefully what their clients are asking them for example, buying Bitcoin. So yeah, we see demand from this. So this is the typical institutional demand. A lot of people are denying still that there's institutional demand for Bitcoin, and this is just not true. You can show them articles like this. There is institutional demand. There are a lot of companies, and I'm not just talking about Twitter. I'm not talking about MicroStrategy. There are a lot more companies out there that plan on putting Bitcoin on their balance sheet. Don't get me started on countries. I mean, yesterday we saw that now Argentina is thinking about making Bitcoin a legal tender. That's quite something, no? All right. Last thing I saw and is an article, I think by Bloomberg. It originally was Vitalik Buterin, the founder or co-founder of Ethereum, cast doubt over Jack Dorsey's Bitcoin DeFi plan. So Jack Dorsey, CEO of Twitter, is planning to build a DeFi, decentralized financing apps on the blockchain, on the Bitcoin blockchain. So basically adding smart contract functionalities to it. So the classical thing that everybody uses Ethereum at the moment. And of course, this gentleman, Vitalik Buterin, has to criticize him for this and has to express his doubts, because if this is done to Bitcoin, and remember, Bitcoin's computational network, the hash power going on there is far larger still than Ethereum, yeah. And if that would be possible and done by such a big company as Twitter, this could really endanger Ethereum. So, of course, Vitalik Buterin is criticizing Jack Dorsey for that. But in the essence, in my opinion, like putting aside all ego, putting aside financial interests, of course, of the co-founders of Ethereum, there are as well. This is good for all cryptocurrencies out there. This is good for Bitcoin, because it develops Bitcoin also away from being just a new type of money. Because the cryptocurrency Bitcoin is an app on a blockchain, if you want to say so. And yeah, I mean, he twittered here, Square is creating a new business focused on building an open developer platform with a sole goal of making it easy to create non-custodial, permissionless, and decentralized financial services. Our primary focus is Bitcoin. Its name is to be determined. And so they want to create a platform where developers can deploy decentralized financial services. What is a decentralized financial service? This is, for example, the possibility, a smart contract to connect a person that wants to borrow money with a person that wants to give a loan. Without the need to have, for example, a bank as the middleman, making it cheaper, because the bank, of course, as the middleman, normally wants to take its cut away out of a transaction like this. And this would would basically delete the need for middlemen. And this is a direct threat for the financial industry again. So apps like this are threatening the financial industry, almost all of the financial industry, in my opinion. And I think I can have an opinion about this because I used to be a banker for large parts of my career. So I'm really for me it's a little bit like what Jack Dorsey is doing. Seems to me a little bit like what Elon Musk, for example, has done to the world of electric vehicles and battery charged transportation. Very nosy. I think if like in a couple of years, 5, 6, 7 years in the future, we look back, you might say like you remember this tweet from Jack Dorsey. This is maybe where it started all. But I might be wrong, of course, too. But I mean, this guy really. I mean, Twitter is a large company. This guy has a lot of power, a lot of influence, and obviously has a lot of money under his sleeves as well to execute on plans like this. All right, enough for the news. So let's have a look at what we can expect in the upcoming weeks from Bitcoin. So currently, we see that we have not been able yesterday and also still not today to recapture this 200 days moving average. This is not so good because this is really a metric a lot of professional traders and institutions out there are looking at to determine whether we are still in a bull market or not. And so what we possibly could see now is, for example, and I need to zoom out a little bit more. Sorry, hold on. So, like this. I'll zoom a little bit more here. So we might see something like this if we take this as a starting point for this, a little bit down, up again. So this would be a typical pattern to unfold, and please excuse my non-existing drawing skills here. My wife always tells me my drawing skills stopped in 4th grade, so I'm good in drawing stick figures, and that's about it. But I think it illustrates what I'm talking about here. So we are very likely, in my opinion, to see a continued phase of consolidation, which will lead us maybe into this area of between 40 and 42,000. And then when nobody expects it, we might see something like what we are down here again. So you see volatility getting lower. And this is the one thing Bollinger Bands, for example, in my opinion, are good because they show you, okay, the volatility, so the movements up and down of Bitcoins are getting narrow, and suddenly, boom, yeah, you have this volatility squeeze. And the last volatility squeeze we saw was to the upside. And you can always see this when the Bollinger Bands go like this, when they open up like a scissor. And this is almost always an indication that a new trend is forming. And in this case, we went from a long sideways range we had there really for almost 80 days into a bullish trend again. And this is something we could see now again. This is my favorite scenario. And so I support what Pentoshi said there on Twitter, that we go down. We might not even go all the way down to 40 or 42,000. Could also be that we kind of start oscillating around here with not much action, and then suddenly, zoom, we jump up again. Because remember, all the quant models out there, most of the quant models out there, especially the very popular stock to flow model by Plan B, is still saying that we should see at least 100,000 US dollars as a Bitcoin price this year. And I know a lot of people kind of expect the market to only go up, and reach these 100,000 within a week or 2 weeks or something like this. But you have to remember, this market is now maturing a little bit. So back then, when you had those crazy price swings in 2013 or 2000 and 2017, you know, where we went like from under 1,000 up to almost 20,000. I mean, those were crazy price swings. And what you normally see as the market gets more mature, you have more market participants in there, is that volatility decreases a little bit. We still have a crazy volatility in Bitcoin, of course. You don't see a market with such a large transaction volume where the price within 2 weeks or 3 weeks goes down by 50% just to rise by 50%. Then again, you don't see that so often. But it would be very, very healthy for the market to consolidate a little bit in this area between, let's say, 42 and 46 or 47, maybe 48,000. Have the span, which is also good to trade. I mean, if you're expecting like this kind of a range now, it's very easy to determine where could you enter the market and where should you exit the market. Once it goes down to 42, start buying. Once it goes up to 48, start selling again, possibly. Make up your own mind there. So, and an indication that this scenario is likely to play out, we see the beginnings of that actually at the moment already, with the sentiment dropping a little bit towards the neutral zone again. And believe me, if we have another couple of days here where we just see a sideways markets or the markets going down, the sentiment, the fear and greed index will go down from 70 to something like 60 or 50. So in this neutral area where it's not fish, where it's not meat, when nobody really knows, like, oh, yeah, Bitcoin, poke it with a stick, hey, do something. It's boring, it's just going sideways. And this is healthy because it lets people reaccumulate their positioning and overthink their positioning. And because usually what you see with assets that rise very fast is that the corrections are very severe as well. So it's not unheard of if you have something rising by 100% to see a correction then of 40, 50 or 60% again from the all-time high. So my favorite scenario is for the next really, let's say 2 weeks, maybe 3 weeks, that we move sideways a little bit, somewhere between this area of 42,000, 40,000 and 48,000, which is still a large area, to be honest. I mean, we're still from 40 to 48,000. That's still a move of 20%. So talking about volatility, or when talking about Bitcoin in terms of volatility, it's always a little bit on a whole different level there. And after this, I personally expect that we see the scenario we saw down here again, that suddenly we see an outbreak, probably to the north. I say probably to the north because obviously you always have to take into consideration that there could be something like a black swan event. A black swan event, I don't know, America banning cryptocurrencies, something severe, something that nobody is really expecting. And when you have those black swan events, it doesn't do that much in the long run for the valuation of an asset, but in the short term, of course, it can lead to severe overreactions to the downside, or can also be a positive black swan when it would be white swan to the upside. So really something we saw back here in that area when we had Tesla announcing that they are not going to accept Bitcoin payments anymore, Elon Musk bashing Bitcoin and proof of work mining and so on and so forth. And really, and China coming then banning Bitcoin mining. So those are black swan events. They don't really change the long-term outcome that much, but short-term they can be very severe, especially if you are trading leveraged. So make sure with any position out there really that you don't over leverage yourself. Don't usually utilize more than a leverage of 1 to 5 or 1 to 10, except of course you want to use a small portion of your money really to do some crazy trading strategy, which is legitimate. I mean, it's fun by the end of the day. All right, yeah. So this is really it now. So after this correction period, I'm expecting that we see rising markets again. And yes, I personally expect also that we are going to see higher prices than the 64,000 we saw already this year. If it's going to be 100,000 or even higher, well, let's see about this. But I think it's the market still has a lot of dynamic, and traditionally this time between September and December, after a year after the halving or 1.5 years after the halving, is the time where we see the highest price swings in Bitcoin always. So exciting times ahead. I will, of course, keep you updated on this show on how things are playing out and how to be smart and position yourself for scenarios like this. Until then, please remember always to take a stop loss, use a stop loss, possibly use a take profit, have a good risk reward ratio. So always try to win more when you are losing with a trade. If you have any questions for us, please reach out to us under academy@primexpt.com. So really any question you might have, just send us an email. We guarantee that we'll get back to you as soon as possible. And if it's something very interesting and relevant for a large audience, we like to cover your questions, of course, also on this show. And also be sure to follow us on Twitter under @px_academy. And if you are new to trading, you can sign up using the links here on YouTube or Twitch. If you're watching on Trips, click on About, then you'll see sign up links. And if you use these links, you will be tagged also as a client of the Trading Academy. So you'll you'll get some special treatment, let's say like this. And if you have questions, then your questions will be answered faster usually. And you also have the special offer of claiming your 50% deposit bonus if you use the promo code Trading Academy. All right, this is it already for this week. So today's Thursday, tomorrow's Friday. We are going to see each other again on next week, Tuesday. Until then, please stay safe, use a stop loss, use a take profit. And yeah, I'll see you again next week, Tuesday. Take care and goodbye.